Hey everyone, joining me this week is Jim Bianco of Bianco Research. Back on the show, we're going to talk macro and, of course, a little bit of Bitcoin. So, Jim, thanks so much for returning to the show.
Yeah, thanks for having me.
All right, well, let's start with macro. Let's zoom out because the Fed is expected to cut interest rates. I'm curious what you think is going to happen.
They're going to cut interest rates, and we're just debating whether or not it's going to be a 25 or 50 basis point cut. The day we're recording, there's been a bit of a rethink in the market. It had settled on after the CPI and PPI numbers came in hotter than expected that the Fed was going to cut rates 25 basis points. And that was, probably 85% chance that that was going to happen. Then Nick Timiraos, the Wall Street Journal, wrote a piece saying, the Fed could potentially cut 50 at this meeting. And that moved those probabilities in the markets from 15% of a 50 basis point cut to pretty much even money, 50-50 right now. And that's where we are, is we're debating whether or not it's going to be 25 or 50 basis points. Now, a quick word about that. This never happened before. 4 days before the meeting, it's always 95.5 is where it's been. And if it's ever been close to 50-50, Nick Timiraos would write a piece so it would go to 95.5. Now he wrote a piece and took it to 50-50. So he made it worse. He didn't make it better, is what he usually is what he's done. So there's a big debate here as to what the Fed is going to do. Let me make a bigger picture comment about why this matters. The Fed's going to start a journey next week. They're going to start cutting rates. Okay, where's the destination? And the destination is, what is the neutral funds rate? Because right now, the perception is that the funds rate at 5.25 to 5.5 is restrictive. It's holding back the economy. Although I personally would argue the stock market doesn't seem to be bothered by it. Bond market doesn't seem to be bothered by it. And most of the economic data doesn't seem to be bothered by it. But nevertheless, they're going to start this journey. Where is neutral? Where do they get rid of the restrictiveness? The Fed thinks it's under 3%. The marketplace thinks it's 4%. I think it's 4% too, or 3.5 to 4 to be more specific about the marketplace, or the consensus on Wall Street is around 3.5 to 4. If the Fed cuts 50, I think the signal is, no, we've got to get all the way to 3. We got to do 10, 25 basis point cuts to get back to neutral. So let's do 2 of them at the first meeting because we got a lot of work to do. And the concern I have is if the funds rate's neutral, the neutral funds rate is 4, they're going to go blowing past that number, go way below it. And they could wind up stimulating another leg of inflation in 2025. Now, if I'm wrong on this, if Wall Street's wrong on this, I welcome the Fed to explain why they still think that the funds rate, neutral rate, is still under 3%. They won't touch that. No, they won't touch that debate. They're just talking about cutting rates. They're saying that they're restrictive, but they're not saying where the destination on the journey is. And when Jay Powell's been asked this question, he's been evasive on the question. So that's really where I think the 25 to 50 matters. Do they think they got to go to 4, or do they think they got to go under 3 before they finally get to neutral?
Coin Stories is proudly brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and AI. As a publicly traded leader, Bitdeer boasts a massive 900 megawatts of operational data center capacity and an additional 1.1 gigawatts under development across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Bitdeer's leadership laid the groundwork for the original advancements in Bitcoin mining ASICs. It's really the only company in the industry with the track record and clout to disrupt the market again with groundbreaking new designs for the next generation of mining ASICs. Now, Bitdeer is leveraging years of expertise in data center and cloud management into high-performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. Well, to the average person, a 25 basis point difference doesn't sound that big, but to you, you're saying that it could actually usher in several more rate cuts that are pretty significant given how quickly they raised interest rates and now they seem to be reversing course. And some people think they're a couple steps too late.
I actually don't think they are a couple steps too late. I actually have I have a heterodox opinion that the funds rate is not been restrictive enough. But I know that a lot of people think that they're too late, and that really goes to the point. There's 2 points about that, right? Are you too early or are you too late, and how far off sides are you? And I'm really talking about the how far offsides are you? Because if you're not nearly as offside as you think, you can afford to be a little bit early or a little bit late. So those that are talking about that the Fed is too late still think that the Fed has to cut interest rates hundreds of basis points.
Mm.
And that's why they think that the Fed's too late. Those that think the Fed only has to cut rates 100 basis points don't think they're necessarily too late. Because if you only have to cut them 125 basis points to get to neutral, we could be at neutral at the end of the year. There's still three more Fed meetings to go next week, November and December. We could be there in 90 days. But that's why the question about them, whether or not they're being too late, is a valid one. And again, I'll emphasize, stock market, as we're talking, is within 1% of an all-time high. It doesn't seem to be bothered by this level of interest rates. Oh, but the Fed's going to cut rates, and that's why it's rallying. Well, it rallied when we didn't think they were going to cut rates too earlier this year.
Well, I'm glad you brought that up because I think some people are a little bit confused by the whole macro environment. Some things feel unprecedented. The amount of spending that we have on the fiscal side with these higher interest rates, stocks are still near an all-time high, but we do see sectors of the economy weakening. We see unemployment ticking up. I mean, a lot is sort of brewing, and we never printed this much money. As the result of the pandemic, I mean, we exploded the supply of money, and obviously it takes time for that to work its way out of the system. Inflation has come down, but it is still elevated. Can we just zoom out for a second? I mean,
Sure.
Where is this really going for especially the average person who's trying to protect their savings and hopefully grow it, accumulate wealth? I feel like it's very difficult to navigate this because many people are expecting a crash because things have been so frothy, but it never really comes. It almost feels like we're crashing upwards.
Yeah, you're right. It is probably one of the more difficult environments to really understand, and it's because I've termed it, and others have termed it, the post-pandemic crisis. In other words, I've joked that you should never have another guest over the age of 25 because anybody who remembers 2019, it gets in the way. That things changed after 2020. That's what I'm trying to say, and that we need to understand what's changed and how it's changed. And in a lot of ways, we're having a debate about whether or not they have changed. Well, the biggest thing that's changed post 2020 is inflation. We've had inflation and we still have inflation. Another big thing that's changed post 2020, as you mentioned, is government spending. It exploded higher during the pandemic to try and stimulate us during the pandemic, and it slowed down a little bit, but it's still at unprecedentedly high levels. The other thing that's changed post-pandemic is population growth in the country. This is probably one of the least talked about things. The population in this country is growing at a 30-year high. Why is that? It's not because we're having a baby boom. It's because a lot of people are coming across the border every day, and that's why the population is swelling. Most of those people that are coming over the border don't have a job. That's why the unemployment rate's going up. The unemployment rate is not going up because people are losing jobs. In fact, the layoff numbers are showing no one's getting fired. It's the reason the unemployment rate is going up is because every day unemployed people walk into this country. That's why it's been going up. That's important to know because usually the unemployment rate going up means the economy's slowing. This time, because of the population change, it isn't. Now, I mentioned all that, with inflation, government spending, and population growth. This is what makes this period so difficult. Everybody goes back to says, see, in 2019, I learned how the world worked, and I'm applying those rules to this, and everything should be going to hell, and it isn't because there's a new set of rules that we should be using in this post-pandemic world. I think 20 or 30 years from now, we're going to look at, the major economic turns in this country as being like World War II as being the 1960s, the oil embargo in the 70s, the inflation peak in the 80s. Then I think we're going to fast forward to things like 9/11, the financial crisis, and the pandemic. So I think what we've seen in 2020 was a major economic turn. And yet, you know what most people think? It wasn't. They think that it was like this. We all went home for 3 months, got a PPP check, and then we all went back to work. It was a major economic change, and we're still trying to understand it. Unfortunately, we're having a debate, too, as to whether or not that even happened in the first place.
What you're talking about is very interesting because I know that the first time we had you on the show, it was you were talking about this regime change. And some of the other analysts out there have said that they think the era of QE is over. But I find
Mhm.
that difficult to believe just because we have to print money in order to sustain all this debt that we've taken on. And every single time you take on more debt, you have to print just to match a smaller and smaller amount of real growth. And so I'm just curious. I mean, 5 years from now, where do you see this? Because when I look out, I'm like, oh my gosh, you have to find assets, and obviously, I think Bitcoin's the best one. But they're going to have to keep printing and debasing the currency. So currency holders are going to lose and asset holders are going to win. We aren't in a situation like 0809 where the housing bubble is about to pop and home prices are about to collapse in half. I wish they were so that I could maybe get into the market. But I just see basically the printing continuing and the average person having to work harder and harder for money that's worth less and needing to find assets to protect the value of what they're earning. Do you agree?
Yes. And I just, in that question there, you mentioned you wish that home prices would fall. One of the reasons most of the housing data is weak. Starts are weak. Affordability is that it's hard to
Mhm.
afford a new house. Mortgage monthly payments are high because of high mortgage rates.
Mhm.
Except home prices keep making new highs every month.
Yeah.
Why do home prices keep making new highs every month? Because 11 million people are in this country now that weren't here 4 years ago. That's the state of Georgia. The state of Georgia is 11 million people. We need a lot more housing units because more people are coming into this country every day and they need a place to live. And that's why we have a housing shortage. That's why prices keep going up. I point that out to the last thing I was talking about. Things have changed. We got to start to understand that there's been a major demographic change in this country and it's affecting a lot of things. To your other point about printing money only works under one scenario of no inflation. If you have inflation, you can't print money. If you start printing money in an inflationary world, you're just going to create more inflation. You're going to drive interest rates higher. You're not going to drive them lower. And that's really the big question that we have right now. Now, you're right. We stopped printing money. We stopped QE in 2022. We've been doing quantitative tightening since 2022. We backed off a little bit on the quantitative tightening in 2020 in last year. But we're still doing it. But whether or not we actually go back to QE or go back to zero interest rates is really a question about whether or not we've resolved this inflation problem. Now, I don't think we have. And I don't think we can go much beyond 4% interest rates. And if we do, we create inflation and we actually wind up creating higher long term rates in the future because the market will have to, people will avoid the bond market in an inflationary cycle and they'll have to look at the idea of getting more compensated for higher inflation rates. So it's definitely made trying to figure out what asset to own difficult. And I'll throw out one other thing too. If you look at the stock market, it's been very clear and it's been fairly documented by a lot of people, including myself, that 7 stocks have been the primary driver of the stock market this year, actually for longer than this year. And if you take those magnificent 7 stocks out and you look at the rest of the stock market, the Russell 2000 small cap stocks, or the mid cap stocks, or the other 493 stocks in the S&P, you got some pretty mediocre returns out of the stock market. You made some money, but 4, 5, 6%. But then it's the Nvidias and the Microsofts and the Googles of the world that have really, and the Metas that have supercharged the overall indexes that have caused a lot of gains. So that brings up that question about what asset should I own? Should I own just the Mag 7 stocks? Sure. If you can have your net worth, in some period and not affect your lifestyle, because that's what volatile growth stocks do. They go up a lot, then they go down 50%, then they go up a lot, then they go down 50%. Or if you need another type of asset that is going to be a consistent winner for you, it's a very difficult environment right now. The stock market has worked for you. The bond market's been working for the last couple of months. But the question is, will they continue to work? Because if we get into a period like 2022 where we have inflation, they might not work at all, because during that period, we saw stocks go down, 2022, bonds go down, and crypto go down too, when we had inflation. So really, inflation is the real critical thing. Is it really resolved? Is it really defeated? Now, a lot of people on Wall Street think it is. I push back on that. But we'll find out here real quick, because the Fed's going to be cutting rates, and we'll see what happens when they start stimulating the economy.
What would have to happen for you to see the QE, the return to the zero bound, to be inevitable? Do you feel like there's anything that could be around the corner where they would have to go back to 0% interest rates, or you don't see that at all?
No, inflation has to go away. They cannot do it with inflation. If you want 10% interest rates, QE when you have inflation, because you'll scare everybody out of the bond market. If you want the stock market to collapse, QE when you have inflation, because they'll be scared from 10% interest rates. You can only do QE when you have no inflation. So inflation would have to go away, and have to be permanently go away. Now, one way you can get rid of inflation is you have a weak economy. That kills demand for stuff, and that brings down inflation. But it only lasts as long as you have a recession. As soon as you stop having a recession, inflation rebounds. So there has to be some signs that the inflation numbers are really, really going back to a pre-2020 era. Two things about that. One, they're not close to a pre-2020 era. Core inflation is still over 3%. Before 2020, it rarely got above 2%. And yes, that is a big difference between 3 and 2. I still think that if you look at the numbers on wages, if you look at the numbers on housing, and if you look at some of the numbers, even in goods, I could make the case to you that some of those numbers are sticky, some of those numbers are bottoming, and that the inflation rate is not going to return back to some kind of 2% or sub 2% world. If it does, you can open the door to QE, you can open the door to zero interest rates. By the way, usually the way it would work is first interest rates would have to go back to zero, and then the Fed would QE. They wouldn't necessarily QE with interest rates above zero. At least they've never have before. They usually go to interest rates to zero first, then they start QE.
Well, we have to take into account the fact that we are in an election year. And even though the Fed is supposed to be independent, a lot of people feel that some of their decisions have been political. So I wanted to get your take on all of that. And what do you expect as the outcome of this election, especially for markets?
The Fed, there's a pithy line I like to use. The Fed is not partisan, but they are political. Not partisan. They don't sit around the FOMC meeting and go, let's be real. We don't like Trump. He mean tweeted us, and he said nasty things about Jay. So how do we get Harris elected? They do not do that. They do not do that, and I believe they don't do that. But they are political. They're worried about their reputation. They're worried about how they're going to be viewed in Washington. They don't want oversight or regulation. And so they do take into the politics of what they're doing into account. So why are they cutting rates in September? I've talked to some Fed officials about that number specifically, and they say, look, if we cut rates, we're going to get yelled at. If we don't cut rates, we're going to get yelled at. So no matter what we do, we're going to get yelled at. So we might as well do what we think is the right thing, and that is to cut rates. And so that is a political decision that they're making on their part. But I don't necessarily think they're partisan. As far as the election goes, I just got done updating some of my election numbers. I look at the betting markets, look at the polling averages. It is too close to call. It is absolutely too close to call right now. Anybody that gives you a prediction about this election today is basically telling you what they want, not what the data suggests. The data, we don't know who's gonna be in the election. But let me say this. Maybe we could transition to crypto. I think the Bitcoin community made a mistake. They made themselves partisan. They tied themselves to the Republican Party. Now, I'm not saying that the Republican Party is bad or anything, but I thought crypto was supposed to be nonpartisan. But it's clear that they seem to be favoring the Republican Party, because they're hoping that they're going to get more favorable regulation. We're going to get this, that the government is going to have like a crypto reserve or a Bitcoin reserve and a lot of that other things. Even if Trump wins and they pick the right horse, I think in the long run, to be viewed as a partisan asset is not a good thing. And I'm thinking a lot about the Nashville conference and the excitement that everybody had around Trump speaking at the Nashville conference. And I'd say exactly the same thing if it was the Democrat. It would have been Biden at that point that spoke at the Nashville conference, and they got excited about him too. It should be nonpartisan, but unfortunately, it is partisan. And so the outcome of the election is going to matter a lot to the price of cryptocurrencies.
It's time for a quick break to hear these messages from my partners who make this podcast possible. First up, Casa. It is so easy to set up your Bitcoin 3-key self-custody with Casa that I can show you pretty much the whole process in just 30 seconds. You're watching it right now. I recently switched to Casa for multi-sig collaborative custody and inheritance planning because of their enhanced non-KYC required privacy and the ease of this mobile app. Make sure to watch the tutorials and get your Casa plan for 10% off at casa.io/Natalie. Next up, Speed Bitcoin Lightning Wallet, one of the fastest growing wallets out there. Speed is a secure, low-cost way to send or receive Bitcoin instantly. It's super simple and scores high user ratings. You can even use it to shop gift cards of your favorite brands and earn rewards. Download Speed using the QR code on the screen or the link in my show notes and use promo code COINSTORIES10 to get 5,000 free sats. Next up, Coinkite. Coinkite makes everything you need to safely self-custody your Bitcoin, including the cold card wallet. That's the cold storage device I use for safekeeping my Bitcoin. You can verify the source code, it's ultra secure, and it's easy to use even if you're a beginner. Head to their site in my show notes and get a 5% discount with promo code COINSTORIES. And finally, the why of Bitcoin is easy to grasp, but the how can be so confusing. The Bitcoin Way is a professional Bitcoin IT and security team offering personalized one-on-one support that guides you through cold storage, setting up nodes, inheritance planning, privacy best practices, and more. Don't take my word for it. Take 82-year-old customer Bill's.
Give the Bitcoin Way a try. You will be well on your way to owning and protecting the greatest money ever discovered.
Set up your 30-minute free consultation today. All right, back to the show. I agree that one candidate is going to, support regulation that's a little bit more favorable to this industry rather than the other, at least for now. But I also disagree with you. I don't think that Bitcoin is partisan, and I think that had, let's say, Harris wanted to come to the conference and be totally pro Bitcoin, want to protect self-custody and embrace it, people would have gotten just as excited. And I think that a lot of people have become single issue voters, and they just really want the best candidate for the thing that they're most passionate about, which is Bitcoin for a lot of the folks attending that conference. But the great thing about it is apolitical. It is a neutral asset. There are so many people, and I want to bring them on my show because there are a lot of people trying to educate the current administration, the Harris campaign, all the Democratic lawmakers out there about why they should embrace Bitcoin in the same way that Republicans have. And it is true, Republicans have been more friendly to it. So I see that changing in the future. I'm actually bullish, but in the short run, I do think a Harris administration would be a little bit more of some people call it a choke point, right? Choke point 2.0. They're a little bit more
Choke
aggressive.
Point 3.0.
Yeah, towards this industry, but we'll see how that plays out. I do want to turn to Bitcoin though, because you had this thread recently with the ETFs, and I know Matt Hogan from Bitwise commented, as well as Eric Balchunas from Bloomberg Intelligence, and it was just really interesting to see you commenting on the outflows all of a sudden, and you said that these have been tourist vehicles. So I want you to talk about that and why you're not as impressed as so many of us are about the performance of the Bitcoin ETFs this year.
Well, at the top line, Balchunas and Hogan are correct that it's been the most successful launch of an ETF ever because of the $17 billion inflow of this family of Bitcoin ETFs. By that measure, by the way, the biggest failure in the history of the ETF industry is probably then the ETH ETFs, because they've had a $500 million outflow since late July when they've come into place. That then gets to a question as to why has there been no net new money into the ETH ETFs, and there's been $17 billion of net money into the Bitcoin ETFs. And let me break that down. 12 of that 17 billion came in by March, and 4 billion has come in over the last 4 months. 1 billion has come in over the last 3 months, and 1 billion is outflowed over the last month. So those flows have been slowing. And the answer that I've looked at with the data is that, you know, a lot of the flows that you see in the non-grayscale ETF, because grayscale has been getting nothing but outflows.
Right.
A lot of that money is going to the BlackRock ETF, the Fidelity ETF, the Bitwise ETF, and they're getting a lot of money from there. If you look at a lot of the on-chain analysis, where is most of the money coming from that's going into these funds? Most of the money. And it's really coming from on-chain. And if you want me to put it bluntly, it's somebody that owns Bitcoin in a Coinbase account. Oh, now I can buy the BlackRock ETF. So they sell their Bitcoin in their Coinbase account. They move it back to their E-Trade or their Robinhood account, and they buy IBIT. Well, that's not net new money into the space. It just moved from on-chain back into their TradFi account. That's the vast majority of the money. When you cut through it all, that $17 billion, how much of that money, when you talk about is move from grayscale, move from on-chain into off-chain, how much of that money is actually new money? And I only think it's a couple of $1 billion. And then there's a third section. The biggest owner of these ETFs are hedge funds, bigger than investment managers or wealth managers. Hedge funds are not making one directional bets on Bitcoin. They're doing basis trades. They're buying either the ETF and selling or shorting the coins on chain or vice versa. So they're doing basis trades for every dollar they've got in the ETF, they've got a corresponding opposite dollar short, or if they're short the ETF long, in on chain. So there's not nearly as much new money coming in to the sector as everybody thinks. Now, the wealth management community, I think that the numbers have been good in the wealth management community, but if you're really thinking that, oh, that's it, to use the Dylan LeClaire argument, oh, the boomers are coming. Yeah, they are. And they're not going to move the price for years because they're not going to be coming in big enough volumes to matter for several years. So the product itself, I don't have a problem with. Where my problem is that everybody's overhyping it. It's not what you think it is. It's a tool. It's a nice tool, but it hasn't changed anything. And the last thing I would give you is look at what's happened since March. The Bitcoin flows have continued since March, but their rate of change has really slowed down. You've had the halving, you've had the halving that's happened with that, you've had the flows that's happened with that, and you had Bitcoin embrace the Republicans. And what has the price done since March? A series of lower highs and lower lows. And the last thing I'll point out to you, as we talk now, the price is $58,000. I do this calculation. I put it in the tweet that I had last week. Where I calculate like the average purchase price. I just take what is the flow that day and what is the price, the average price for that day, and assume that the flow bought that singular price. It's approximation, but it's pretty close. The average price that these Bitcoin ETFs have purchased at is $61,000. So the average Bitcoin holder is sitting with a loss. And you can actually see it in the 13F filings because they have to give their average price. They're all sitting at a loss. And everybody keeps telling me, wait till the boomers come. Wait till they get, Morgan Stanley gives approval so that they could buy the Bitcoin ETF. Why? They're going to turn to all their friends and go, how's that working out for you? Oh, I'm sitting with a loss with it. Oh, good. I can't wait till I can get my loss too. If you want the boomers to really get excited about Bitcoin, get it to $100,000 without $1 of assistance from the ETFs. Then the ETFs will come in. It's going the other way. It peaked in March. It's been 7 months now. Price has been tracing out lower highs and lower lows all the way through. I'm not necessarily bearish on the price. I'm not necessarily bearish on the space. I'm just trying to say we've overhyped this. we've way overhyped what this thing is, and it's not what you think it is.
Well, when I listen to you, I mean, the thing that comes to mind is just time frames. I mean, it has only been what, about 6 months or so that we have data on these ETF flows. With every 13F filing, we do see more institutions starting to embrace Bitcoin. And obviously, the wheels of this, they turn very slowly in the sense that charters have to be changed, and people have to discuss, various issues about compliance and are we going to invest in this vehicle? It doesn't happen really necessarily overnight. I agree with what you said about hedge funds in terms of they're sort of a fair weather friend. They're not into Bitcoin because they want to hodl it forever, but they're seeing it more as a trade. But a lot more people are starting to venture into this new asset class through this instrument. And so adoption over the long run, I would say, is going to grow and benefit tremendously from spot Bitcoin ETFs being around. So I mean, where do you see this in the next 6 to 12 months? I mean, don't you think it's sort of inevitable that Bitcoin will eventually get back to a new all-time high, maybe surpass $100,000, and obviously the ETFs will perform well?
In my tweet thread, I did say at the end that I thought that, this tool will be useful and will be beneficial. And then I said after the next halving in 2028, if you wanted to put a time frame on it. I don't think 6 to 12 months is a long enough time frame for you to start thinking about how this tool could eventually bring people in. And then I also said too, the other thing is that if you want $100,000 price, you're going to need that to come from on-chain buying. And what this is doing is it's sucking money off of on-chain back into TradFi accounts. And that, by the way, I've in previous tweets from months back, I used to say is a worrisome sign, because what it basically let me say it in blunt terms. What the public is basically saying is this whole on-chain thing sucks, and I'll keep my money in my Robinhood account and I'll own IBIT, but I don't want to go over there on that on-chain stuff. There's nothing to do. It's hard to do. If I lose my seed phrase, I'm done. I don't like it. I like your coin. I want it to go up. I just don't like on-chain. That's why the money's moving from on-chain back into TradFi accounts. And that, I think, is worrisome. And it should be a signal to the developers. You guys got a lot more work to do. You guys, the developers, are going to be the key to $100,000. You got to make it so that people want to stay on-chain. Now, let me bring up an example. I mentioned ETH. Why does ETH have $500 million outflow? Why hasn't there been any net new money because of their ETFs? And I hear the maxis right now screaming because it's a shit coin and all that other stuff. And I'm going to say to the maxis, your enemy is JP Morgan and the Fed. It's like I said to you, if you think driving ETH to zero is going to help you, welcome to $1,000 Bitcoin. You need ETH as much as ETH needs you. You don't need JP Morgan. Now that I've said that, because ETH has got other things to do. 40% of their coins are locked up, are basically locked up in pools or have been staked. You can get interest rates on it. So people that own ETH on chain look at it and go, I own ETH, I own Bitcoin. My ETH has been staked. I'm getting an interest rate on it. Why would I move it back on chain? Why would I, move it back into my TradFi account and get zero interest rate on it? I've got some of it in some Uniswap pools. I've got some of it, lent out on Aave, my ETH. Why would I move it back? That's why you're not seeing the flows into ETH, because the flows in Bitcoin came from on-chain, because there's nothing to do but hodl it on-chain. You don't get an interest rate. So if that's all I'm going to do with it, I'll stick it back in my Robinhood account. You're not seeing that happen with ETH because there's so many other things to do. That's what the Bitcoin community, they're starting to do it. They're starting to look at Bitcoin DeFi and a lot of other things. That's what needs to be done. And that's what needs to get people back on chain. And that's what will get your price to $100,000. And that's what will get the wealth manager's attention. Right now, if it gets approved at Morgan Stanley or it gets approved at somewhere else, the wealth manager is going to look at it and go, it hasn't done shit for 6 months. And my friends that own it are sitting with a loss. I'm talking about the ETF now, since it came into being. Yeah, eventually I might get interested in it, but I'm not burning to jump on it right away. That's kind of the attitude I think that's out there with it.
Well, I do hope that in the future people take the time to understand spot Bitcoin and why taking self custody is so important, as opposed to just having the convenience of the ETFs and paying however many basis points in order for someone else to essentially hold the Bitcoin. But I think that number go up is going to have to happen because there is a general lull in the space. We've been chopping along. We call it the 58K gang. We just keep seeing 58,000 come back, and it really is, I just think, a product of the greater macro environment that we're in, and we haven't seen liquidity really tick up. And it seems like Bitcoin is very correlated to M2 liquidity. I was watching a video about it the other day. My partner's looking into this. And so it seems like when central banks start to expand again, that's going to be very, very good for Bitcoin. I think it'll be great for the ETF. So I'm curious to hear your take, because I think you are bullish on this space in general. Like, where do you see Bitcoin going, let's say in the next 5 to 10 years? Do you think that this should be in every person's portfolio despite the volatility?
Yeah, no, to put it, to take some of those points that you brought up. Yes, I think what I was trying to say about that, it's on the developers and stuff. If you didn't, get the inflection in my voice, I think that's not good. That people are looking at and saying on-chain sucks. I'd rather hold it in my Robinhood account, and because that's where a lot of the money has come from. Just like when the ETFs first started in the 90s, and there was this big rush of money into ETFs in the 90s. Where did the money come from? It came from mutual funds. So that the stock market, it was net neutral. You took $1 out of a mutual fund that owned stocks, and you put $1 in the ETFs that owned stocks. It didn't really do anything for the stock market like it is today, where it's just all new money that's coming in. Well, it's the same thing that's happening here. Just taking $1 out of on-chain and you're putting $1 into your TradFi account to buy one of these ETFs. I agree that people should understand the importance of self-custody. They don't, because they view it as too risky, if I lose my seed phrase, and too difficult to do. So therefore, it's incumbent upon the industry and the developers to make it easier and to make it more enticing to do. And that will attract more money on chain when that happens. So the signal here is not that the ETF exists and that all the boomers, all the Greenwich Country Club boomers are going to join in by buying IBIT. The signal here is that when you created IBIT, everybody that had an account on Coinbase said, good, now I can get off Coinbase and go back the other way. And that's the concern that I have. So I completely agree with you about, self-custody. Now, if you do that and you develop it out and you make it more enticing and there are more use cases for it, you'll get to 1 million or 100,000 on your way to 1 million in the next couple of years easily. But it's not incumbent on Balkunas, and the rest of them, Hogan, basically sending out another tweet about how great the ETF industry is, and that's going to lead us to the promised land. It's not. It's the developers that are going to lead you to the promised land by making this a true alternative currency and a true alternative form, of alternative financial system. The last thing you mentioned too, I'll push back on this, that when you print money and the market goes ballistic, Bitcoin goes up. So it becomes, but then so does gold, and so does TQQQ. TQQQ is the 3x, the triple levered QQQ. It looks and it correlates very highly with Bitcoin. Ultimately, you don't want to be another version of TQQQ, and that's what it is. I've often said I would like to see the correlation between the TradFi market and Bitcoin go away to become something independent of that. The reason it isn't is because it's not developed out on chain. When it is, and it becomes a more alternative type of system, I do think then you could see it just rally no matter what the environment is. Then at that point, because there will be a broad-based adoption of it, and it will be a thing that people want to join in on. Right now, no one wants to join in on chain. What people want to join in on is number go up. And that's what we're selling them. is buy this thing called IBIT or buy this FTBC, or, BITW or whatever you want to, whichever one you want to buy, and then sit there and do nothing and it will magically go up multifold. There's a lot of work that needs to be done to make it go up. Why does NVIDIA skyrocket? Why did NVIDIA go up huge this week? Because Jensen Huang, the head of NVIDIA, made a statement that they've got a new AI chip and that all their customers are clamoring to get it, and they got a shortage of them right now. And that's why they need to see that. That's what you need to hear about in the Bitcoin community. New breakthroughs, new exciting things happening. Right now, my criticism is everybody's defined the exciting thing as 75,000. No, the exciting thing has got to be something else on chain you could do with it, easier to hodl it, easier to self-custody it, all of the above. Quit waiting for price and make it a better system. And then the ETF flows will follow.
Wow, what a call to action. I'm excited to hear you advocating for self-custody. And by the way, 2 episodes ago, I made a tutorial on how you can take 3-key and 5-key multi-sig self-custody. So go watch it, less than 40 minutes. So anyone can do it. I know that some people do think it's intimidating, but I think those tools will come. And so I just have to ask you, do you see Bitcoin going to 1 million? I mean, some of these price predictions are even difficult for me, a very passionate Bitcoiner, to believe. I might be more bearish in the short run, but when I see people talking about $10-13 million Bitcoin, I'm like, I don't know how we get there. Do you believe that it'll hit 1 million a coin?
Well, to hit 1 million a coin is very simple. I mean, and it's very difficult to do. You have become the alternative to the system, to the financial system. That you are sucking money out of the financial system into this new system. Dollars are leaving and going into here, and the dollar becomes scarcer and scarcer, and people stop wanting to use the dollar, stop wanting to hodl dollar assets, and want to hodl digital assets. Now, we're not there yet. We don't have an alternate financial system yet around Bitcoin. A little closer in ETH as far as the financial system goes. And I hear the maxi screaming that, it's all scams and shit coins and stuff. Fine, then you're never going to get there. But you got to fix that, and you've got to get there in order to have it to be an alternative system. So if you want the price to go to $1 million, they used to make this statement about Apple when Apple was the first company to go to $1 trillion, that when it was the first company to go to $1 trillion, how did it get to $1 trillion? Something like 60 or 70 telephone companies and other technology companies went out of business. And at Apple's market cap was it was Nokia, and everybody else's market cap got sucked into Apple. That's how you get Bitcoin to 1 million, is that you're going to take all these assets from outside in the TradFi system and suck them into the digital system. That's why I said, quit arguing with the ETH crowd. They're your friends. Your enemy is JP Morgan and the Federal Reserve and the US Treasury. That you're taking their money away from them. You're not trying to take the money away from ETH. If you want to fight that coin, fine. Then I'll come. Invite me back in 20 years. Maybe we'll break 60,000. If if that's what you're going to do, you're going to have a zero-sum game trying to fight with ETH. But if you want to say, look, I want to take on JP Morgan, I want to take on the Federal Reserve, I want to beat them at their game, then if you can get to $1 million. Do I think the industry can do it? Yeah, I think the industry could do it. Do I think the industry wants to do it? Some days I think they want to do it, and other days I think they get lazy and they just want to hodl and wait for the number to go up. So, I call to arms, as you said before. Yes, let's look for that call to arms.
I can't tell if you think it's going to 1 million or not. It sounds
no,
like
I do. I actually do. I just think it's like any business. Every business has this idea that it could be worth 10x, 20x more if it executes properly. And it does, and it fulfills its promise. This can, if it executes properly and if it fulfills its promise. It's done a great job of it. I hate to say this, until 3 years ago. 3 years ago, November of 21, it was 69,000. And here we are in September 24 at 58,000. So we've kind of stalled out here for the last 3 years. Now, what's the next leg higher? Development is the next leg higher, not adoption in an ETF. It's development, and that will bring the adoption into the ETF. And that will get us going. Like I said, why is Nvidia worth more than Bitcoin? Because they keep inventing new products and keep people excited about their products and keep people wanting to buy them. What's Bitcoin been inventing? What's the devs been inventing that's gotten people excited in the last 3 years? Maybe that's why the price hasn't gone anywhere.
It's interesting to hear someone who's so entrenched in TradFi talking about these killer apps that are needed on Bitcoin and the development needed. But I do think there are people
You've
that
got
have their
killer
heads
apps.
down.
You took it from 0 to 70,000, by 21. So
Yeah.
you did that. But this is a brutal game. This is like sports. Yeah, you hit 4 home runs in the game yesterday, but this is a new game today. You're 0 for 0 today. I need you to hit more home runs today. Quit, because that frosts me every time the Bitcoin. Well, in the last 10 years, the price is up a zillion percent. Yeah, because it went up a lot 8 years ago. It went up a lot 4 or 5 years ago. It hasn't done anything in the last 3 years. That's like, let's say you're a 300 hitter, but you've been 0 for 40. Yeah, well, you're still 300 hitter, but you haven't done anything for the last 40 at bats. So yeah, I'm kind of overstating it. They haven't gone 0 for 40, but that's what they've got to do. They got to bring on more exciting things from this moment forward and quit telling me about the gains that we had 5 years ago.
Well, sometimes I think about the internet adoption wave and how Amazon crashed after the dot-com bubble, and it just takes a while for new technologies to be adopted by the majority of people. There's that bell curve or S curve of adoption, and I think we're still just so early. And so there are
Yes.
some great tools out there. People just haven't discovered it, and I think when they will, they'll appreciate, honestly, the simplistic tool that is Bitcoin. We don't need anything too sophisticated on Bitcoin, but I understand your point. I understand where
So
you're coming from.
let me give you a quick example. But I'm familiar with the Amazon story, right? In December of '99, Time Magazine's Man of the Year, Person of the Year, was Jeff Bezos. 25 years ago, he was the man. He was what Taylor Swift is now. He was Man of the Year. He was Man of the Year because of Amazon. And what was Amazon in '99? It was a bookseller. It was a bookseller in '99, and then it crashed. Why did it crash? Because Jeff, you were a great bookseller. You made Man of the Year. I need another act. And over the next 10 years, he developed Prime, he developed video, and he sold everything and anything under the sun. And then he developed 2-hour delivery. And then his price went up 200x after that. So that's where you are right now. You're the greatest bookseller ever with Bitcoin. Now I need you to develop Prime. I need you to develop 2-hour delivery. I need you to develop video. And, and that's what you need to do. You have to constantly innovate. It's like I said, I don't care. It's nice you hit 4 home runs yesterday, but today's a new game.
All right, Jim. Always great to hear from you. We're running out of time, but any final thoughts or any other takes that you weren't able to share while we were together?
No, I mean, don't get me wrong. I do like the space a lot, and I am optimistic on the space on the development side. I just want to repeat that again. I just don't think that if you think the magic to getting this thing higher is going to be that the Greenwich Country Club is going to burn up the phone lines calling their wealth managers going, buy IBIT, that ain't going to get you there. That isn't going to get you there. And I think we've got this all backwards. That's just the argument that I'm trying to make.
Well, I'm very bullish on the future. Again, kind of bearish in the short run because I don't know what's going to happen. We might have I'm waiting for the 30s. I'm going to pile up and stack some sats in the 30s. No, just kidding. But
that might be the ultimate bullish story, right? It's 30,000 again, right? And that everybody hates the thing.
No. I think that Bitcoin is on its long journey upwards, and I'm really excited that we have people like you who are embracing the space, even though sometimes you critique it, and I get it. So thank you so much, Jim. I'm going to have all of your work and links in the show notes. Please check them out. Bianco's research is fantastic. And Jim, hope to see you back on the show soon.
Thank you for having me. Enjoyed it.
Thank you so much for checking out this episode of Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open. If you want to share feedback or guest suggestions, just reach out at natalie@talkingbitcoin.com. Make sure you're subscribed to the show and check out my free newsletter, nataliebrunel.substack.com. I'll see you next time.